Happy Friday and happy Valentine's Day from all of us here at StablePoint Partners. Wanted to get our thoughts out to you here Friday, February 14th, back to talking about the markets and some of the things that have happened this week and last that we think are impactful, and just wanted to share our thoughts. I'm going to break down today's thoughts into three areas. One is exciting, two is terrifying, three is magnificent. They all have some interesting characteristics with how they relate to today's markets. First and foremost, what's exciting? The price of eggs is up 53% in the last 12 months, up 15% this month alone. I was talking with my wife this morning on what is the price of a dozen eggs, which are approaching $10 now in many grocery stores, and leading into some of that inflationary talk again. The egg situation, right? They're directly related to the bird flu, is not really connected, in our opinion, to tariffs or other inflationary issues, but we do have some inflationary issues that have popped their head back up this month. You've heard us talk about inflation and interest rates a lot lately, for good reason. This is going to be a big driver of the Fed's interest rate policy, obviously what comes out of inflation, and that's going to be a big driver of financial markets, stocks, bonds, and other assets. So in the month of January, we did see a big pop in a few areas. This is an area that economists will refer to as super core inflation, that removes things like basic goods, energy, and housing, and looks at inflation across the board outside of those areas. And we saw a big jump in super core inflation here in January. A lot of that was driven by automobile and home insurance. We also saw a big uptick in things like hotels, car rentals. A lot of these things are actually wildfire produced, and a lot of what's happened in Los Angeles has had a little bit of a spread on prices in those areas. But we're keeping a close eye on this super core area of inflation, as it tends to be a good forward-looking indicator of core inflation when we look across the board, across our economy. And if inflation starts to heat back up, the Federal Reserve is going to have to put interest rate cuts on pause. So really cautious there with potential interest rate cuts for the rest of the year, not just the eggs, but everything else that we're seeing on the inflation front. And that leads me to point number two, which for some may be terrifying, but we want to take away that mystique around tariffs. And what's happened as recently as yesterday, on Thursday afternoon, President Trump talked a little bit more about reciprocal tariffs that are going to go into place theoretically in a few months, with the basic underlying premise of, if you have a tariff on us, we're now going to put in place a tariff on you. And this may hit places like the European Union harder, and probably has the biggest impact on pharmaceuticals and other things that we're heavy importers of from those countries. So to take away some of the terrifying components of some of the headlines that you might see, we shared recently a great report from Goldman's economics team that talked a little bit about the prior wave of tariffs on China, Canada, and Mexico. If those were to go through, we anticipated about a 0.7% increase in prices in our economy, and about a 0.4% reduction in our GDP, the measurement of our overall economy. These are not massive numbers, and this is if those tariffs do go in force in full. And from what we've seen from a lot of the economists, they really do think that the tariffs that are proposed will not end up ultimately going in effect in their full intention, and often are used as a little bit of a bartering point to try to get some other things accomplished. But we are looking at that very closely. Every day, every week, there's new news on that front, and it will have some influence over specific industries like pharmaceuticals, like automobile sales, and others. And if that warrants a pivot in the investment portfolio, we'll be right ahead of that. However, at this point, we don't see that as a major mover, and we wouldn't change long-term investment strategies over any of the proposed tariffs that we're seeing in the market right now. My last, final, third point, to move from terrifying to magnificent as we head into the weekend, and for those of you with kids in school, maybe a week off with President's Week, the Magnificent Seven that we've talked about for a while, that has been a real source of excitement with AI and tech and everything else that's happening. We've talked a lot about the other 493 companies that make up the Standard & Poor's 500. And over the last year or two, the Standard & Poor's 500 performance has really been driven by the Magnificent Seven. If you strip those 7 companies out, you're looking at a materially different result in the stock market. And we've talked a little bit about the potential here in the years ahead for that performance to balance back out a little bit more, potentially even for the top heavy nature of the S&P 500, those magnificent seven, potentially to even underperform the other 493 stocks that have been largely forgotten about. And we're starting to see evidence of that this year. And I looked this morning at just 2025 year-to-date performance of the Magnificent Seven and the S&P 500. And both are up. The markets are doing well this year and are both positive. But through Thursday, the 13th, the Magnificent Seven were up about 1.5% on the year. The S&P 500 as a whole is up around 4% on the year. Not a major difference, but the delta that you see between those two is all coming from those other 493 stocks, mostly forgotten and unloved over the last year or two. So we do think that trend can continue and would continue to encourage investors to be evenly balanced with their investment holdings, rebalance a couple of times a year, and don't allow yourself to get too top heavy in any particular area of the market. So that's what we're seeing in the markets this week. We wish you all the best for a wonderful weekend, holiday Monday, and we hope you all have a fantastic Valentine's Day.